And now to our top line story. Stocks are rebounding today after a sharp sell-off yesterday sparked by a new AI tool from Anthropic PBC. So for more on this, we're going to bring in our guest host for the hour, Brooke Thackray, research analyst at Global X. It's good to have you in studio. Thanks for joining us.
Thank you.
What we saw yesterday was pretty incredible. I'm not sure what your thoughts are on it. Was it a bit of an overreaction in terms of the sell-off?
Yeah, there's been a lot of questioning about the whole narrative around AI. So it's sensitive to any changes, any news formations, or anything that comes out. We're seeing the NVIDIA as well going back and forth with OpenAI. So when you have an announcement by a company, it's everything else can really suffer from that. So it's just, I think investors are really skittish at this point. Is it an overreaction? Do we expect this to continue to go down? I think we're going to see. And I don't think continue to head down the same level, obviously, but I think we're going to go back and forth here and slowly work our way more into reality here.
It's kind of like, 2025 seemed like a year for a conversation about AI and what's going to happen with AI in the future. And it seems as though 2026 is like, okay, we've seen all that spending for AI. Now people are kind of looking for results. Is this results, do you think, what Anthropic was releasing yesterday?
I think that there's more to it than just the results at this point, because there's just all that skepticism that's around. Is this going to pay for it? Is there circular deals going on back and forth? And we, like I mentioned, we saw NVIDIA talk about, well, we're not going to give money to OpenAI. And then OpenAI come back and say, well, maybe we're not going to use NVIDIA chips. And that whole circular flow diagram that we've seen with Anthropic and everybody else going back and forth, that seems to be falling apart a little bit at this point.
It shows almost how vulnerable some companies are to any kind of this is quite steep competition. Obviously, this tool coming out, a lot of companies feeling that pressure now. It shows just how vulnerable companies are to competition.
Yeah, so if we go back and we take a look at with AI, everybody's saying AI is the future, and it is the future. But there's room for everybody because we're growing so fast, and it was growing so fast, and still is growing fast. And everybody can do well in the space. But now all of a sudden we're becoming more competitive here. And we've seen that with Google coming out with their TML chips versus NVIDIA as well. Oh, there's other chips. NVIDIA doesn't have the only chips. And so we're seeing with Anthropic as well, all of a sudden producing different platforms where now it's more competitive. And I think we're in that stage where we're seeing more fiscal responsibility, more competition come in. So we're going to see these reactions. I don't think it's going to all of a sudden keep continuing heading down here. But I think we've seen the best of the rapid rise around the AI stocks.
It was interesting, though, the reaction, right? And we kind of saw the ripple effect of that throughout the markets. I'm not sure if you noticed other sectors like the financial services and asset managers sectors. There was a ripple effect from the tech sell-off that we saw yesterday.
Yeah, there's no question that's what happens because tech really tends to drive the market a little bit. It's a real beta sector, so when investors pull back from that sector, we see it spill over into other areas as well. And tech got hit hard. You look at Shopify, it got hit hard yesterday. It was down almost 10%. And it releases its earnings next week. It wasn't like it was coming out with big earnings or anything. So we saw it just ripple right throughout. And that's going to happen. With technology, actually, as far as the S&P 500, makes up about 34% of the S&P 500. So it's a huge chunk from that standpoint, from a capitalization standpoint. However, there were sectors that did do well, for instance, in some of the cyclical sectors and the mining sectors, et cetera. So it didn't go out throughout the whole market. It did spill over, but it didn't hit absolutely everything.
So with that in mind, how should investors be looking at this? Should they be going to those sectors that weren't really touched by what happened yesterday? Or as you say, it's not going to be a long-term thing when we're seeing this sell-off of other techs?
Well, I think we're in a real generational change here a little bit. So I think, although I don't think we're going to see this big, huge collapse continue down, I do think we're going to see it whittle down. Technology has been underperforming since October.
Right.
And we're seeing this up and down here. And I think we're seeing a rotation take place. And that's why it's susceptible to these big, huge corrections that take place. We're seeing a rotation from the growth sectors of the market, particularly technology, into the cyclical sectors of the market. Investors still want to be invested. It's not like they're trying to leave the market. They're saying we want to be invested in other sectors. And I think that's going to continue. I expect the technology sector to continue to underperform. At this point, I think investors are still going to move into the cyclicals. And the big question is they're also going to move into the defensives as well. we saw the consumer staples sector up 1.6% yesterday, which is very interesting, a huge discrepancy with the technology sector. So it's saying that we're seeing this rotation take place, and it's just the market moving and investors moving. I don't think technology, as much as it's going to change the world, I think there's other places to be, and investors are now examining that, whether it's precious metals, whether it's some of the cyclical sectors like
trying to
industrials.
diversify.
Yeah, we're seeing that broadening out, and more of a rotation, but we're seeing broadening out as well.